The covered call ETF JEPI, aka JEPI, has only existed since 2020, but its popularity has skyrocketed due to its high starting dividend yield and the fact it pays out dividends every single month. So in this video, we're going to be taking a deep dive into JEPI to see if we can better understand the fund and decide if it's an investment worth considering. The overall goal for JEPI is to generate distributable income every single month, while also providing exposure to the equity market with less volatility. According to JP Morgan, the fund generates income through a combination of selling options and investing in US large cap stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends. It seeks to construct a diversified, low volatility equity portfolio through a research process designed to identify over and undervalued stocks with attractive risk return characteristics, and for someone who considers valuation very important, I'm glad to see that that's the case. The fund also seeks to deliver a significant portion of the returns associated with the S&P 500 index with less volatility in addition to monthly income. If we look at the fund's holdings, you'll see that 80 to 85% of JEPI's holdings are blue chip stocks that yield around 2%, with their largest holdings being Progressive, AbbVie, Hershey's, MasterCard, The Travelers Company, Bristol-Myers, Coca-Cola, PepsiCo, Visa, and US Bancorp. These 10 make up about 14.5% of the fund's total holdings, and the other 122 holdings make up the rest. The fund is well diversified as financials takes up around 16% of the holdings, industrials 15.3%, healthcare 14.15%, consumer defensive of 12.6%, technology 11.76%, and the other sectors are all 8% or lower. The fund has a 0.35% expense ratio, meaning that for every $10,000 you invested into JEPI, you'll be paying around $35 in fees. And this expense ratio actually does beat out some of the other covered call ETFs such as QYLD. The current dividend yield for JEPI is sitting around 12%, but before even considering JEPI, it's important to understand how the fund generates such massive dividend payments for their shareholders. And like we've already seen, their top 10 holdings are solid companies, but they aren't really known as high-yielding stocks. That's because JEPI is able to generate massive dividend income because 15 to 20% of the portfolio is ELNs, or also known as equity-linked notes. Basically, these are a more advanced version of covered calls. A covered call is a financial contract in which an investor sells the right to buy shares of a stock at a certain price for a specific period of time. By selling covered call options, JEPI collects premium from buyers of those options. Almost all the income JEPI generates and pays out each month is based on the option premium it receives on these equity-linked notes. It's important to note that the income generated from options premium is heavily dependent on market volatility. Based on historical market option volatility, JP Morgan says that JEPI should deliver around 5 to 8% yields, which is far from the yield the fund has offered over the past year. So basically, the more volatile the market is, the more options premium JEPI can provide, meaning JEPI shareholders receive more income in the form of dividends. So while the current dividend yield is great, keep in mind that according to historical data, it may not always be that high. It's also important to remember that equity-linked note income and covered call income are not qualified dividends, meaning that they're taxed at ordinary income rates. This means that while some of the dividends you receive from JEPI will be taxed as qualified dividends, the majority will not. This unfortunately makes it a much less attractive investment option unless you hold it in a tax-deferred retirement account. So while it's probably not wise to go all in on JEPI like some people on Reddit, there are definitely still some benefits to the fund. For example, in 2022, JEPI actually outperformed the S&P 500. The S&P was down nearly 20%, while JEPI was down around 13%. Another very popular covered call ETF, QYLD, was down nearly 29%. This leads us to an important point, and that's that JEPI typically performs better in highly volatile markets and performs its best during sideways or bear markets. In my opinion, I think it could be good to view JEPI as a hedge against these scenarios. If you're looking for immediate dividend income or looking to start using those dividend payments for personal expenses in the next few years, JEPI could be a good option to consider. To better understand JEPI, let's make a projection to see how the fund will perform compared to another popular dividend ETF, such as SCHD. If you'd like to be able to download the spreadsheet used to compare these funds, then you can head over to my Patreon page at the link in the description. So in order to make our projection model for JEPI, we need to make some assumptions about how the fund will perform in the future. This is actually a little bit more difficult to do for a fund like JEPI because we have limited historical data as the fund was created back in 2020, but we can make note of just a few things. And the first thing we will take note of is the fund has grown its share price a little bit over that time period. So if we jump over to our analysis, you can see I'm assuming a share price growth rate of 2% every single year. We're also assuming I'm going to be making monthly contributions of $1,000. Now coming over here and looking at our dividend data, let's go ahead and jump over to Seeking Alpha. If we look at the dividend history for this fund, we can see the dividend payouts every single month have fluctuated quite a bit. If we come over here, we can see the lowest dividend payout a month was 26 cents per share, and over here we can see the highest was 62 cents per share. So while it has fluctuated quite a bit on a year-to-year basis, the fund has grown its dividend just a little bit. So if we jump back over to our model, you can see I'm assuming a dividend growth rate of around 1%. Now the starting dividend payout per share that I'm applying is 8.5%, but the current starting dividend yield is actually closer to 12%. And that's because, again, the dividend payouts you receive from JEPI are dependent on how volatile the market is. And according to JP Morgan, they expect this fund to pay out closer to around 6 to 8, or maybe even 8.5% in dividends every single year. So with this data, we're able to project out 30 years into the future for how this fund will perform. So let's go ahead and jump over to our analysis, and we're going to see some data on how the fund will pay out yearly dividends and how the yearly portfolio value will look. If we look 10 years from now, if we were to invest in JEPI with those assumptions, we could expect to receive around $15,774 in dividend payments every single year. 20 years from now, it'd be closer to $50,000, and 30 years from now, it'd be about $118,000. And if we look at the yearly portfolio value, after 10 years, it'd be around $200,000. After 20 years, it'd be around $721,000, and after 30 years, around $1.89 million. Now, there's a couple of things we do have to keep in mind. One of them I did already mention, that the fund performance for the dividend payouts is highly dependent on how volatile the market is. The more volatile, the more you'll receive in dividend payments. It's also important to remember that this projection model does not account for taxes. And that's why it's so important to make sure that when you're looking at this fund, if you do invest in it, you do invest in a tax-deferred retirement account. Now, a lot of people do view this fund as a potential tool to live off of dividends. So let's go ahead and look at this analysis as well. And to jump into this analysis, we need to assume a couple of different things. I'll go ahead and zoom in a little bit more. Let's assume we have a $4,000 monthly cost of living and inflation is 2% every single year. So this black line is our cost of living, and we need to get our dividend payments above this line. So if we jump over here, you can see, assuming everything we just plugged into our model, it would take around 25 years for our dividend payments to jump above our cost of living. It's also important to remember that everything we've looked at is if we do include reinvesting dividends over that same time period. If we were to not include reinvesting dividends, this dividend growth would be much, much slower. So here's my final thoughts on JEPI. JEPI is a powerful tool if used correctly. If you use it incorrectly, the fund could really slow the growth of your portfolio. The fund does a great job at providing large dividend payments every single month, while also allowing you to take part in some of the overall growth of the equity market. The fund typically performs best in sideways or downward markets, especially if there is a lot of volatility. The dividend payouts from the fund won't be consistent, but they do have the potential to grow slightly over time. If you're someone who is looking to potentially retire and live off of dividends in the next 5 years, JEPI could be a good option as long as you buy it in a tax-deferred account. If you still have a long-term investing time horizon, you may want to consider allocating a small portion of your non-taxable portfolio to JEPI and using it as a hedge against highly volatile markets like the one we saw in 2022. Currently, 2.2% of my personal dividend portfolio is allocated to JEPI. There's no doubt that long-term broad market dividend ETFs like SCHD and DGRO will outperform JEPI. If you need long-term returns that beat the S&P 500, JEPI isn't for you, but when utilized correctly, JEPI can provide a great boost of dividend income to your portfolio and potentially help you live off of dividends faster. If you'd like to be able to download the spreadsheet using this video, then you can head over to my Patreon page at the link in the description. Seeking Alpha is also currently running a 58% off discount at my affiliate link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.